Good morning and happy Friday, everybody. It is the game plan time here. My name is Gareth Soloway, Chief Market Strategist at VerifiedInvesting.com, coming to you live from Verified Investing Studios. All right, so we have a market that is higher today. It was so interesting yesterday. We had this nice sell-off, and then overnight the narrative switched in the mainstream media to, oh, don't worry, Jerome Powell is going to say exactly what he needs to say to keep the party going, and we saw the futures going up overnight, right? Just floating up to the point where today we're finding ourselves over a 50% retrace of the high to the low yesterday. So we've recovered about 50% or more of that drop. But remember, 10 a.m. Eastern time, basically 1 hour from now, Jerome Powell will be making his speech from Jackson Hole, and that will be very pivotal to today's price action. All right, let's flip over to the charts and get right into it here. What we have on the markets is the pre-market data on the S&P, or the spiders, and what we see very clearly is we closed right here yesterday. After hours yesterday was kind of sideways chop, and then you could see when we reopened at 4 in the morning, the markets have floated pretty nicely to the upside. Now, I am watching one pivotal level here on the markets today. This high pivot from yesterday, you see that, how the market flushed and had the big bounce? That actually also happens to be the 618 Fibonacci retrace as well, all right? So we'll write fib right there, 618 fib. So as we come into this just above 560 level, to me, this is a level I will be watching very, very closely today when the markets get there. And you can see we're at 559.74, so we're really only about 30 cents, 40 cents away from that 618 Fibonacci retrace. I do think this one's going to be one to watch. If we blow right through it, well, then we could easily retest the high from yesterday. But if we stall there, that could be an indication that we're going to flush back down on the Jerome Powell comments. And obviously, I'll be trading this with my traders in the Apex Live day trading room. All right, so that's one of the things we wanted to go over here pre-market as the markets continue to float higher. I did want to briefly talk about, some of the bigger targets that I have. So as the markets are relatively quiet today, this is the S&P 500, right? So this is that move. And if we look at this, and I'm going to zoom out just briefly here on the chart so we can see, if we take a trend line going back to the lows of October of 2022. Now remember, this was the bear market low in 2022. If we look at that, there's a perfect trend line that extends to the low in 2023 before the last big monster move, and that line extends right out to 4,600 on the S&P 500. So many people ask me like, okay, well, you're net bearish on the markets, even though obviously I'm a trader. I go long, I go short, depending on what the charts are saying. But overall, my macro view, there's been no hiding it that I don't think things will work out as rosy as the Fed says, the talking heads say, all of these people are saying. So what is the downside target on a prospective move, right? And so what I do is I look at the trend lines, and what I do is I look for where trend lines coexist together. Because what we know is that when you have multiple trend lines that cross together, that level, if price comes down into it, that's always going to be firmer support versus just one random trend line here where price comes into it there. All right, so what we have very clearly here is this upsloping trend line. We also have a very key pivot top right here that, again, if you extend it out, you can see it's kind of a little flat top right there, and those two levels coexist together. Where is that? At 4,600 on the S&P 500. Now, keep in mind, that's 1,000 points lower on the S&P 500 from where we currently sit. Now, again, okay, two lines coexisting together. Can we find a third line? Let's find out. What if we use our fib tool and we go to the low of the bear market? So we take this low and we go to the all-time high. Let's do that right now. If we extend that out, what we do is look at this, guys. Look at this. This is what we get. The exact line, 4,600 on the S&P 500, is exactly a 50% retrace from this low, the bear market low of 2022, to the all-time high right there. So now what we have is three factors. Okay, so if the markets do come down, this gives us a firm zone of technical support. I actually haven't done this, but now I'm just thinking about it as I'm live with you guys. I would love to see if we curled over here and we create a head and shoulders pattern, if the actual measured move actually potentially measures into that level as well, maybe creating a fourth factor. All right, so again, if we do see a bigger rollover, that would be a level where I would buy aggressively for a bounce in the markets. That would be 4,600. Now, do I think that's your ultimate low of any sort of bear market? To be honest, that's really hard to know. I'd have to see what the fiscal situation is with the U.S. government. I'd have to see what the Fed is doing. Where's inflation? Can the Fed cut rates as much as they need to if the markets were to fall that much? Lots of little nuances that go into that decision making on that front. Okay. So I wanted to cover that with you guys. I thought that was fascinating for this morning. If we look at the NASDAQ, I just wanted to show you guys this on the NASDAQ 100. So we've talked about this prior, this bigger parallel channel, which marked the recent all-time high. And we can see this again, the low here, and the low here. We drag a parallel up, we get this high, and we get this high, right? And that was the high of before this latest drop. There's also a smaller parallel in here within that parallel right here. And you can see the low of that came right back down right there as well. So in terms of this, I'm watching this zone right up here really closely. Can price push through it? Or if it stalls out and comes down, if we take out this parallel, it probably means we drop down to that lower parallel on the chart. So you can have a parallel within a parallel. What you do is you follow the smaller parallel. If that one breaks, then the next parallel trend line, which would be down there, likely is tagged as well. So I'm just kind of going over some bigger macro things for you guys today, since we do have a little bit of a quieter pre-market as we await this Jerome Powell speech at 10 a.m. Eastern time. Quickly going to the U.S. dollar, let's take a look at this. And the U.S. dollar is interesting. So number one, we have broken down on the U.S. dollar here. We can see very clearly you had this wedge pattern, this trend line here. We did break down here. The question is, where could the dollar be going? How much lower, now that the dollar has broken down, could this be going? To do that, what we want to do is we want to zoom out. In fact, I'm going to flip to the weekly chart, and we're going to look for a bigger trend line here. And one of the things I'm seeing here is a trend line that goes to about $95 on the US dollar, so the DXY. And what's interesting about that is you can see that that trend line is essentially parallel with the bottom here, right? So if we look at this trend line, again, this goes back, by the way, to 2011 right here, 2011 right through here, right through this low here in 2021. Notice how this trend line is parallel to this trend line. And so what that does is it gives me additional credence or factors. Because again, it's one thing if you have a trend line like this and a trend line, okay, so that's okay, you have a wedge pattern. But there's something about parallels in the markets that gives firming to those levels. And so what I would say is that if we continue to dump out, the downside likely target would be right here around that $95 level. Now, interestingly enough, we could do some fibs on this. We could find other levels. But you do have, again, a fair amount of technical support right down here and right through and all the way even over to here as well, right? Right through this area right here that gives us additional firming of that level. All right, so that's, again, something to watch here as the dollar has broken down. Remember, a lot of people talk about, especially over the last couple of years, there was a lot of the demise of the dollar, de-dollarization. And I kept on saying to people in the game plan and trading the close to my members that currencies don't work like that in general. Like if you're a third world country, yes, currencies can collapse. But when you're the reserve currency of the world, it doesn't go from one day being the reserve currency to one day collapsing. It just doesn't work like that. It's a long process. If you look at past reserve currencies of the world, they do have periods of decline where they no longer become the reserve currency, but it actually takes decades to occur, not just a day or a week or a month or a year. So just remember that, is I do think eventually the dollar's day is kind of behind it or slowly getting there, but it's going to take decades for that to really play out to the downside. All right, quickly going over a couple stocks pre-market here. Take a look at this one. This is Workday. Workday had a big, initially it dropped pretty sharply on earnings after hours yesterday, then a big pop. I do have a level here that I'm watching in the early session. All right, so there's a big level here that, let me draw this in now. There's a gap fill right here and a trend line, right? So if we draw this trend line across, we can see here, right? So right here and right here. That, to me, is a short-term resistance. Interestingly enough, it's basically where price is currently trading. That does make it a little risky, so just be aware. But I'm very curious to see how price trades here. If we really get a big move up, there's a gap fill right here, which looks to be around the 295 area, give or take. So again, I doubt it goes that high today, but if we do get through this level, you may see a move up a little bit further. There is this little pivot top right here as well, around 280 or so, that could also be resistance. But right now, very clear resistance with this area, this gap fill, and again, that's 263.50 on the charts of workday. All right, next up, let's take a look at Kava. So Kava, again, big move up here. This is amazing. I was just listening to the CEO on CNBC earlier today. You know, they're really seeing great growth, but based on how many restaurants they have at this point, it's basically a fast casual Mediterranean. I've heard great things about it. I've never been there. But each restaurant is valued based on their market cap at like $37 million. That's how pricey this is. So they have a lot of growing into that valuation to do. But I will say that the stock is having a good gap up. The question is, when we go to the daily chart, is there a level to monitor? And I would say this, is that you could make a case on Kava that we could look, and I'm trying to find this here, there's a parallel here, I believe, that I was using earlier today to map this out, which had resistance around 116. So I'm trying to find it right here. Maybe it was right over here. Something like up here, but either way, yeah, there's something in this range, and I'll have to figure out exactly where it was. But I do have resistance on this up in this range around 116. It's trading, last I checked, around 110. So let's see if it pushes up. There's a fairly large short percentage in this, so it could squeeze up initially. But once it gets to about 115, 116, as a day trader, I might look to start nibbling on the short side just a little bit. All right, next stock to look at is Ross Stores. Ross Stores also has a parallel here. In fact, I have the parallel drawn in on this one. And if we go to this chart here, let's in fact go to the weekly chart. Number one, Ross Stores, amazing that it's up as much as it is considering it's a retailer. But here's that parallel also right in this range. So we can see very clearly the low here, so the low here, right through here, and even here. Right, so there's a parallel. We dragged that parallel up. Notice how price got above and then acted like that parallel line mattered before it broke back down. Here's your high pivot. And again, this one looks to be around 168, 167 as big resistance on that. So I would look, again, just looking at this, it generally pulls back off that upper trend line. So again, that would be a level to potentially short Ross Stores that is honestly extended already going into this gap up on earnings. Intuit reported earnings, but not much going on there, guys. You can see a lot of whipsaw early on. The stock has basically floated back to the flat line. But one thing to note, next week, guys, we have major earnings from NVIDIA Wednesday after the close. And I'm going to be trading it with the earnings trader guys in their service. There is a monthly option, so if you just want to come in and trade for that, go check it out. Go sign up, and we'll be trading the NVIDIA earnings after the bell live in a trading room where you can hear us, you can ask us questions, all that fun stuff. So again, check that out on verifiedinvesting.com. All right, quickly what I want to do before we get into Bitcoin and commodities, I want to flip over here, and we're going to do the drawing today. Remember yesterday that the scanner, our verified trading scanner is what won. So that's where it landed on the wheel of appreciation. And remember, we just lowered the price of that incredible value. I'm going to do a demo at some point to show you how amazing this is. But it's basically taking all of the knowledge in here and all the factors I look for, topping tails, engulfing reversal candles, time counts, all of this. The scanner has all that information and scans the entire market. In addition, we're going to come out with one that does for crypto as well. Now, the current scanner is day trading only, so just be aware of that. But eventually, we'll have a swing trading AI bot as well that will be scanning the market for all the setups that I look for. Essentially, it's becoming my cheat sheet, right? So it's like, you know, there's no way I can look at every stock in the market to find all my trades. So I now rely, and I have the scanner up for myself. Just, oh, look, there's a time count on that. Let's go check it out. Oh, that's a good trade. Let's trade it, right? That's the beauty of the scanner. All right, enough of me talking about that. Let's go into this, and we're going to go right here and see what we have. Who wins that scanner today? Again, a 1 month free of the scanner, and it is, there it is, Elise GT6Z. Congratulations, buddy. There you go. Very nice. So, again, you win the scanner. Reach out to Verified Investing, or I should say support at verifiedinvesting.com. All right, follow me to the wheel, guys, real quick. We're going to spin the wheel and see what we are giving away on Monday. And remember, to be in this, you have to Again, share the game plan on one of your socials. We have to be able to confirm it, otherwise disqualification. And look at that, guys. Free year of NordVPN. One free year of NordVPN. And I do thank NordVPN for contributing these free years for us to be able to have on the wheel and be able to give them out to you guys, who we do appreciate for your time that you're devoting to this broadcast. And obviously, that's why I try to bring my A game every day, because I know your time is valuable. And I know I want to make sure that I make it worthwhile for all of you, just like here at Verified Investing. Everything we have on that website is hardcore data related. No bias, no nonsense. There's plenty of websites out there for that. This, again, is a place where you get the facts, just the facts, right? All right, so NordVPN will give away. I do want to take 30 seconds real quick to just take a look at my Smart Money Crypto, and then we'll get right back into it. Here it is. Hey everybody, welcome to Smart Money Commodities and Miners. If it's a commodity, if it's a miner, I'm covering it in this service. I'm giving out exact entry and exit prices on these commodities and miners. And basically what you're going to get is almost daily videos of information, technical analysis, data driven. This isn't a service about hype. This is what is the data telling us to clear out all the nonsense from mainstream media, all the nonsense from social media. It gives you literally the data to use to make trading opportunities happen and profits ultimately happen. So welcome again, guys, to Smart Money Commodities and Miners. Come check us out here at Verified Investing. Into the charts we go. And by the way, it was my fault. It was the commodities service that we just took a look at, not the crypto service. And again, that was my fault there. But anyways, going into Bitcoin here, guys, Bitcoin is right on the pivot line. Can it punch through? I was just saying this to members earlier today, because I do literally a morning video for my members of all my services and an afternoon video, a deep dive video. But I was saying to them that today is so pivotal for Bitcoin, because when you have a Jerome Powell speech like this and you're right on a pivot line, he's either going to say something that's going to push up Bitcoin and get it above this line, or if it doesn't, that's where things get a little nasty, right? Or could get a little bit nasty. So really, really pivotal on Bitcoin today. Can it get above? Altcoins have run amazingly well, except for Ethereum. Ethereum's kind of in the doghouse right now. But in any case, Bitcoin right on that pivot line. We'll watch to see. In fact, let's look at Ethereum as long as we're talking about it here real quick. And Ethereum, guys, I'm just going to show you this. So, this is a chart that is actually, this is a bullish pattern. Right? There's no doubt about it. You have your wide range bar right here, and you very clearly have your sideways consolidation. My only issue with Ethereum is that every other altcoin, I shouldn't say every other altcoin, but a majority, Cardano, Avalanche, I mean, not Solana too. So Solana and Ethereum are kind of lagging here. But this is a very bullish pattern. It needs to break out. When you're looking at the price pattern time factor, so there's the methodology that I teach in the Winning Trader series is called the PPT methodology. PPT. And by the way, PPT also means plunge protection team, so it kind of works both ways. You can look that up, what that is. It's a very interesting little side note there on what was created by Reagan to stop markets from the 1987 type crashes. But in any case, this stands for price, pattern, and time. So those are the three factors that matter to markets and in charts. So what you have here is you have the pattern. The price action is fine, right? There's a bull flag, pattern is there. Time is ticking. Tick, 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 tick. The time factor is actually the most important factor. And so what ends up happening is that eventually, if this doesn't break out in a certain amount of time based on time counts in the methodology, the probabilities go from favoring an upside move tremendously, like let's say a 70%, 75% chance of an up move, you actually start to see the probabilities start to favor a down move, where it flips back to 50-50 and then a down move. So I would just say this, same thing with Bitcoin. Bitcoin's on a key level. Ethereum needs to start to break up, or time is going to run out, and then you get a failed move, and you probably would head back down here on the charts. All right. Next up, let's take a look at gold. Gold is inching back up on the positivity here with the market. So we see the stock market going up because of hopes that Jerome Powell delivers the perfect speech today. Gold is also rebounding from yesterday. Again, we're still stuck at 2,500. I still think there's a chance of a little bit of a pullback, maybe back down to 2,400, give or take. But ultimately, if you ask me where this is going, 2,660 is still my upside target for early 2025. We've already achieved my 2024 target of 2,500. 2,500. Silver, same thing, a little bit of a bounce today. We're kind of right on this kind of little semi-pivot point right here. Again, upside resistance would be 31. Downside, if it really dumps out, would be back honestly to about $26.5. Copper, just wanted to show you guys copper real quick. Copper, again, has had a big fall, just like a lot of the commodities here. But what we can see here is there's no doubt there's a trend line right here, and you've run into this, and you also have this pivot top right here. So there's a lot of resistance on copper right here, and copper is really looking to the macro picture. They're looking to the Federal Reserve. Can the Federal Reserve get this economy going again? And remember, there's a huge disconnect here, and I just want to pause real quick and talk about this. So the stock market wants its cake, and it wants to eat it too. What I mean by that is that the stock market's pricing in 6 or 8 rate cuts into early next year, a lot of rate cuts. But they're also pricing in there's no recession. So wait a minute. So how does that work, right? So how do we get that many rate cuts but no recession? That doesn't mesh. Something's off there. If we don't have a recession, you might get 2, 3, maybe 4 rate cuts. Markets are pricing in 6 or 8. If we do have a recession, then we have a recession, which is bad for stocks as well, but then you'll get more rate cuts. So there's a disconnect with the stock market, which is why I'm very nervous about what we've seen lately with this massive move to the upside, and why I just want you guys to be fully aware of that as well. All right, last couple charts we'll quickly go over. We'll take a look at oil, which continues to bounce. The main thing on oil here is to understand the methodology, and what you see in the methodology mostly is you have 1 hit, you have 2 hits, you have 3 hits. 3 hits, essentially, you very rarely break down below a trend line up till and through 3 hits. On the 4th, it's a 50-50, but what most of the time happens here, or at least the other 50%, you go up a little like we're doing, and then you flush to the downside. And so it looks like that's what's occurring here, is that you get that move. So again, remember, 3 hits of a trend line, usually you don't break. 4th is 50-50. Once it bounces, if it bounces off that 4th, you have a 70% chance of breaking on the 5th hit. And again, this is all probability-based, time-tested, back-tested, all that stuff. And again, I bring it to you guys because this is institutional knowledge. But again, to be honest, it needs to be shared with you guys as well. Lastly, natural gas, guys, coming down again. No chart levels on this right now. You guys know I was being very cautious, telling everyone to be careful. In fact, we unloaded our natural gas position right up at this high area here. And I said, listen, unless we confirm above this level, don't buy it. And sure enough, we didn't, and down it comes. Where is this likely going to go? Well, you can do a basic trend line here. You take this low right up through this low. And again, my line won't be perfect, but it'll be pretty close. And it basically takes us back to $2. So my guess is we'll head back to $2 now on natural gas. It's not that far away, but that would make a lot of sense. All right, I've got to get to the trading floor, guys. The Apex Live Day Trading Room here is ready to go. We're ready to trade some of these charts. Thank you so much for an amazing week here at Verified Investing, for supporting us, for understanding that what we're trying to do is really even that playing field between institutions and retail investors like yourselves, and really just give you this knowledge that hopefully you're able to learn from, improve, and hopefully it improves your financial future. That would be making my day every day of the week if I knew that I could be influencing and helping you guys improve your financial gains over the course of the rest of your lives. Thank you so much, guys, for tuning in. I'll see you on Monday. Take care.